This is Matt Russell from the FX Power Course, and welcome to the Daily FX walkthrough.
So here are the four pairs that I will be discussing this evening: the Euro Pound, the Aussie Kiwi, the Pound Swiss, and the Euro Swiss. So let's go ahead and pull up the charts. The first chart is the Euro Pound, and if you'll notice, a penetration of the previous resistance line, and then prices did close back beneath the line. However, I was personally stopped out on this trade with a stop in the just above that 88 figure. So moving forward here, and also like how I describe also in a lot of my trades, either you have a fixed stop of, let's say, 15 or 20 pips above, in this case, a major technical level, or you wait for a daily close above the level. And this is a good example as to why we wait for a daily close above a certain price level before exiting a trade, because we can see that easily within the course of a day, prices can reverse and fall back in the direction you expected. But there's two sides to that coin, in that if you do so, obviously your loss will be a little bit larger than a fixed stop would. So that's the key risk parameter to settle out, and something that each individual trader has to realize: his own risk parameter, how much he wants to risk on a trade, and that will dictate where the stop is placed. So moving forward now, I still like this as a resistance level. Obviously the stop would change. I would place my stop just above this candle here, just above that 88.70 area. So moving forward, if we get another move back to the previous resistance line, that would be the trade setup that I would suggest. The next chart is the Aussie Kiwi. Not much has changed here. Again, that short trade off this doji here, the reversal near the 125. I was personally stopped out with this trade, but then we have had a nice tight rally off the support. Let me zoom out here and get you a better view of that longer term support line. So right now, with the long trade, I would suggest if you are in this trade, I would look to take some profits with at least half the position right now at current levels, and maybe hold the other half just in case this rally were to continue. The next chart is the Pound Swiss. Not much has changed here. Still just waiting for prices to come down and hit the longer term support line, now located just above that 168 figure. Last chart is the Euro Swiss, and I've been waiting for this trade to set up for several weeks now, or it feels like several months now, and prices are now finally testing the longer term resistance line. Got within a few pips. It's borderline in terms of the favorable risk reward entry, because again, you want to place your stop about 50 to 75 pips above this line. So what I would do over the next 24 to 48 hours is look to get an entry as close to this line as possible, and again, place a stop about 50 to 75 pips above the longer term resistance line. One thing I do want to mention: I have been waiting for this trade for a long amount of time, and in my experience, the longer you wait, it's always good to wait maybe a week or maybe a few hundred pips in advance to set up a trade. But when you're waiting this long, in my opinion, the chances of success are diminished slightly. So keep that in mind. This line is very obvious. This resistance line is very obvious. So that could negate the analysis just a little bit. But moving forward, I would definitely have a slight bearish bias against this longer term resistance line. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.